stacking surfer. The life topic, I'm your best friend. Balances in your bank and stack. What's up, everybody? Stacking Surfer here, back with another awesome video and interview. Today I've got one of the guests that we've had on in the past, Levi Gunter. He is the OneGold Sales and Marketing Manager with APMEX. And so I'm going to bring him on here. I've got some great questions for him. Hopefully you guys will stay around until the end, because I think we're going to have a couple good things for you guys on how to get gold and silver at spot price. So if you guys love that, stick around until the end. We'll have that for you too. But I'd love to hear a little bit more about the markets, what happened last year, what Levi thinks may be going on this year. He's got a lot of great insight and data working with APMEX as well as OneGold. So I'm going to bring him up here. Levi, how are you doing?
I'm doing great. Thanks for having me on.
Good to have you on. So it's been a little while since we've had you on, but markets have been interesting. Just in the last couple days, we've seen the gold price jumping up here, and we had a lot of banks last year telling us that we're going to see $3,000 gold, we're going to see $3,500 gold, and we didn't quite get there, but we got pretty close. And I think most of those banks are still looking at those same numbers carrying on to this year. So to start off with, what did you guys see happen last year? Did you see anything significant that was different than, say, 2023 or previous years? What are your thoughts?
Yeah, well, it depends on how long you've got, right? That could be a really long-winded answer. In short, a lot of gold's tailwinds last year were similar to years prior. So obviously, just looking back at 2024, I think gold had its best year since, I believe, 2010, with about a 26% gain. Depending on which price you track, gold achieved a new all-time high over 30 different occasions, right? So great year for gold. In my mind, there are, I think, three primary drivers for that. And a lot of those, I think, will persist maybe to a lesser degree this year, but they'll still be there. Number one, in no particular order, you've got monetary policy, geopolitics, and of course, central bank buying, right? So, throughout last year, you had the continuation of the conflict in Ukraine. You had things kind of ramp up in the Middle East with Israel and Hamas, and then also more broadly speaking with Israel and Iran, having exchanges. So there was a lot there geopolitically speaking. As far as monetary policy, you saw this kind of gradual, not really gradual, but really, I believe it was 11 rate hikes in between March of 2022 and I think July of 2023. And that brought sort of the benchmark rate up to its highest since, I believe, 2002 of around 5.4%. Well, last year we saw the Fed, despite inflation being above its target of 2%, we saw the Fed start to ratchet down interest rates, I believe 3 times last year, bringing the benchmark rate closer to 4.25 to 4.50%, which is where we are today, right? So those two, I think, helped sort of boost gold throughout the year. And then the big one, which is less applicable to silver, is central bank buying, right? So central banks obviously have been buying gold in massive amounts for a long time, specifically over the last 3 years. I think in 2023 was the all-time high, where central banks bought something like 1,082 metric tons of gold. And I don't think the numbers are out for 24 yet, but last I checked, in the fourth quarter, central banks were on pace to actually break that record, right? So all that to say, like, similar headwinds tailwinds rather, that we've been seeing over the past several years. Looking forward to 2025, I think we're going to have a lot of sort of the same support that gold's enjoyed in those few factors. Specifically, I think central banks are going to continue buying gold. In fact, they've been polled on this. They are asked about this. I think the World Gold Council does a really good job about painting that picture and engaging with central banks. And when they ask central banks, hey, why are you buying gold? They cite rising inflation, falling interest rates, and basically global uncertainty, right? And 80% of respondents to their last survey say they, intend on keeping up their sort of rate of gold buying. I know China had paused their sort of gold buying spree for about 6 months, and then they resumed that back in November. All that to say, I think that's going to continue into this year. As far as monetary policy is concerned, I think the latest CME FedWatch data has about a 23% chance of a rate cut coming up in March. So unlikely to happen then, but they are forecasting about an 80% chance of 2 rate cuts before the end of the year. So, fewer than last year's, but still supportive of gold likely on that front. And then geopolitics, right? We are seeing some calming there. Hopefully, sort of a tentative ceasefire there in the Middle East. We'll see what happens. Obviously, we all want to deal into the conflict in Ukraine too. So maybe we'll see something there, but there's still a lot of uncertainty on the geopolitical front there. Unfortunately, you don't know how sort of the situation in Syria is going to shake up. More broadly speaking, a lot of tension between the U.S. and China, specifically as it pertains to Taiwan. So all that to say, I'm pretty bullish on precious metals this year. Maybe not to the same extent of others, right? I think that just looking at gold's average annual return over the last, I believe, 5 years is around 13.5%. Last year doubled that. So, I wouldn't be surprised to see gold a little bit above 3,100, 3,150 this year, just giving all of those supporting factors. And I think that puts it up by about 20% for the year. So you're seeing estimates quite a bit above that too. But yeah, that's kind of my take on it. Silver's a little bit different. I think it's going to continue to benefit in sort of that dual role that it fills as a monetary metal and an industrial metal. It does not, like I mentioned earlier, enjoy the same like central bank demand. Central banks don't buy silver, but it does have that really healthy industrial demand, which accounts for about half of silver's overall demand. And last year was its 5th, deficit that we've seen for physical silver. It's somewhere around 150 million ounces, right? So there's certainly a favorable supply and demand dynamic there for silver. Realistically, I could see silver closer to $40 by year's end, but willing to be surprised.
Yeah, the interesting thing with silver, just for a minute here, is there's not a lot of silver mines. A lot of the silver comes as a byproduct of other mining, like copper.
Right.
And so, there hasn't been a motive at its current price, sitting around, let's just say $30 to $33. There's not a lot of motivation for companies to go, spin up a mine. So, I think we're probably going to keep seeing those deficits until the price gets over 40, maybe even closer to 50, before companies start deciding, hey, we're going to start drilling like crazy. Now, maybe that'll change a little bit with Trump. If he starts to take regulations away, we could see that open up and maybe be a little bit more cost effective for like existing mines that aren't in operation today. But I think we could see silver quite a bit higher. The ratio is still, really high. We keep touching 90, 91 on the gold to silver ratio. And gold seems like it's going to continue to be moving up. Could we get to $3,500 this year? Anything's possible. But like you said, it's probably going to be more of another crawl unless something changes, in the world, the either economics change or the geopolitical things start to change too. Which kind of leads me to another question for you too. So have you been following any of the news on the tariffs coming out?
Sure. Yeah. Hard not to.
Okay. So the new, I don't know when this video is going to air, so the news may be changed a little bit here, but kind of the dynamics I want to talk about is we're hearing, just on Saturday that the tariffs were put in place for Mexico and Canada, and I believe there was some upping on China. And then today is Monday. We're hearing a little bit about Mexico's put on hold for a bit because some military is coming up to the border. So, as far as I can tell, this looks like a negotiating tactic by President Trump, which tells me that, some of these tariffs may stick, some of them may not stick. There's going to be different things that kind of happen. So it's not so much about what's going on with the tariffs necessarily that I have a question for. It's more about how could something like tariffs affect, the premiums, potentially the spot price, of metals when you're potentially looking at Canada and Mexico that produces a lot of it, but we could also be looking at tariffs on the UK, potentially on Australia, potentially on the rest of Europe too, and even maybe Africa. So if we start seeing tariffs going across the board, a lot of coins are brought in from other countries as well. They're minted in other countries, and they're not all minted in the United States by any means. So I'd love to kind of get your thoughts on where that might go.
Wow, yeah, there are probably kind of two different answers I have for you, right? So there's the sort of the user perspective on OneGold, right? And that's different from maybe the broader retail sector. So just to kind of get into that, like for those of, for your viewers who may not be aware, OneGold is basically a platform that gives customers vaulted ownership of gold, silver, and platinum with options to store, in vaults here in the United States, Canada, Switzerland, or the United Kingdom. And so we largely source wholesale bars. So 400-ounce gold bars, 1,000-ounce silver bars. That's what OneGold products most commonly consist of. And so as far as tariffs are concerned there, I'm not sure that I really see much of an effect, if any, right? So just to give you an example, we're talking about Canada a little bit. If you buy Canada gold on OneGold, say you own 20 ounces of gold and you're a OneGold customer, you own 20 ounces of what's probably a 400-ounce gold bar that has always existed in Canada, right? So what we do is we pre-source metal from other dealers and wholesalers within our network at that storage location. So we pre-source the metal, customers buy it, they have title to it, and if they sell it or whatever, there's no really import-export there. So if they sell it back to OneGold, simply the ownership goes back under the OneGold banner, and that's that, right? So like I said, the first part of that, I don't really see an outsized effect on premiums as it pertains to OneGold specifically. I think the retail market's a massively different conversation, and I think we've already seen some increases in premiums. Just looking at like domestic demand for silver in the United States, about 80% of that comes from abroad, and a lot of that, most of that 80% comes from Mexico, right? So how that doesn't have an impact on premiums and a significant impact on premiums, I don't know. I think it certainly will. But to your earlier point, how long are the tariffs going to stick, right? And certainly people are positioning themselves in a manner that indicates that the premiums or tariffs may be around a while. I think we just saw the latest number was about 82 billion in gold making its way from London to vaults in New York, specifically COMEX. And I know private banks have taken on more gold, but I don't think those numbers have been published yet. So all that to say is I think that there will be an effect on premiums, and I think it's going to be probably a trickle down effect too. So for example, if you look at just coin demand at APMEX, and for your viewers who aren't aware of APMEX, they're a large physical metals retailer. I think they're the largest in the U.S. They do about $2 billion in sales. So we have some pretty good data that's sort of indicative of sort of like what's going on. But as far as like coin demand, about 50% of that, roughly speaking, for both gold and silver, is for gold and silver American Eagle. So those are coming from the U.S. But the next up from there is gold and silver maple leafs, and those account for about 18 to 20% of coin demand at APMEX. And so we've already seen premiums creep up on those products a little bit. And as that happens, people are going to, favor the non-imported products like the gold and silver American Eagle. So all I have to say is I think that, premiums are going to increase starting with some of these products that you have to import. And then make its way down to other products like gold and silver American Eagles, unfortunately. Now, like you said, don't know how long the tariffs are going to last and what the impact will be long term, but we've only been, in tariffs have only been live, I think, for Canada for like a day or so. So we'll see how it plays out, but that's kind of my general feel on it.
Yeah, I think it's going to be interesting because if the strategy is to have tariffs and reduce or get rid of income tax, then there has to be some form of tariffs, right? So, I think what Trump put in place on Saturday was President Trump put in place is kind of a broad tariff on everything. at 25%. And they basically said, if there's any retaliation, I'm going to double it. So at the end of the day, we're either going to have a smaller group of countries like maybe Mexico and Canada, where we may have free trade still to some degree, and maybe the tariffs go everywhere else, or they may have tariffs that are put on there. Maybe it's not for every material, every product. So we still don't exactly know how this is going to play out, even if as the news changes. But typically, when you have a tariff on, it's going to increase the cost of that thing that you bring in, that you import. And we don't make a lot of silver here or mine a lot of silver in the US. Most of that's coming, like you said, out of Mexico. And then we have a fair amount of gold that comes out of Canada. So, it's going to be interesting to see exactly how that all plays out. I know some people were freaking out over the Libertads potentially in the Maple Leafs and trying to chase those down. So I just caution everybody to be kind of careful on paying crazy premiums on anything in particular. Do your research, do your homework, shop around, and check out the news. If you see something that looks like the price has really gone up compared to another product, it may be a real price increase that's going to stick, or it may just be people, freaking out and chasing after something. What I do like that you mentioned too, the Levi, that I think is cool is, with what you guys have at OneGold, you do have that option of buying in that country. And as far as I know, that sounds like that would be exempt from any kind of the tariff issues. So if you really do want some silver or gold that's sitting in Switzerland or in Canada, or even the UK, you'd have the chance to do that. So that sounds pretty cool. So another quick question I had for you too is, when you guys look at what OneGold's done in the last year, maybe even APMEX to a degree too, did you see more buying or more selling going on last year?
Great question. So once again, there's kind of the OneGold answer, and there's sort of the broad like retail answer, right? So overall, what I'm hearing from other brands in the space is really seeing some slowdowns and some softness in terms of sales. Nothing like detrimental, more so like pre-COVID levels, so like 2019. And OneGold probably to a lesser extent. So if I just look at 2024 versus 2023, so full year's data, OneGold's still a relatively young brand. We're a little over 6 years now, so we're very much kind of in that growth period. So just sheer sales revenue from 2023 to 2024, we saw about 108% increase. But if you look at the buyback revenue, or buybacks rather, it was about 189% increase. So massive uptick in folks really just taking advantage of higher spot price, particularly on OneGold. A lot of these customers bought early on 2020 when silver was close to $11-12 an ounce, and now they're taking advantage of the higher spot price, or they're actually they sort of circumvented the premiums then, and now they're redeeming into physical now. So certainly kind of in the trend where strong sales, but certainly a lot of buybacks right now.
Okay, that makes sense. And I think part of that too has to do with just the cost of everything, the inflation that we've had as well. So, this is always an interesting conversation with people where someone bought silver for $12. It's now, let's say it's at $30, and they're like, hey, I made all this money. And the real question is, did you really?
Yeah.
Did inflation just make your silver go up in nominal cost to the dollar, meaning the dollar really dropped. And the reality is the dollar really dropped, but there is still the possibility that you've outperformed inflation with that purchase, and that's really where the benefit is. So for silver, I'm a little bit more leery of using that as a tool of savings and moving in and out of it, because the premiums are a lot higher, at least for the physical, than I am with gold. Gold has much lower premiums. It's much easier to buy and sell, and not take big swings on it. But I think that's interesting that we're seeing that kind of that selling motion going on. I'm curious to see how this next year goes. It could be very much the same, or it could be a little bit different. I'm curious to see if we start getting people, as we go out of the Bitcoin halving cycle, should start to diminish this year to where Bitcoin starts to correct. I'm curious to see if we see more people taking earnings from crypto and putting it into metals. And I don't know how we're going to exactly track that. Is that something you guys are able to track on your end?
To a small degree, sure. Yeah. So we do actually have an option on OneGold where you can convert your crypto to gold via a service called BitPay. And so, yeah, I don't have any trends sort of offhand, but certainly at times you could see upticks and people sort of going from crypto to gold, and wouldn't be surprised to see something like that happen this year.
So we'll have to look back at that at the end of the year, because I'm curious to see how that might go. But yeah, in general, strategy wise, what I'm looking at is I like to have as much physical as I can. But a lot of times you get to a point where you may not want as much physical either on site, or you may want to be a little bit more liquid with it. And if you've got money that you want to take advantage of the gold prices and silver prices going up, and you believe those are going to go up, that's kind of where I use OneGold for me today. It's a way for me to kind of have another savings account that I have low premiums on. And so for me, I like to take advantage of the times when you offer, very low fees, or it's at spot, which does come in from time to time. And so I'm checking in. Are the codes that we have still good and valid for anybody that's new to OneGold?
Yes. Yeah, those should still work. Yep.
Okay, so I'll put those codes up here for you guys. You'll see them on the screen here, and I'll have it down below in the comment section that you can use. So I believe it lets you buy up to $10,000 of gold or silver. Mm-hmm. You can use each one once, and once you've used it, the code expires. Mm-hmm. But oftentimes, if you are a member of that service using that app, you'll get notifications when there's other times where it's very low, or one of the products may have a gold or silver at spot. I don't think I've seen platinum at spot yet, but you can also buy platinum from it. So to me, it's another part of the strategy of what you can do. And then, as Levi mentioned earlier, you can also take your metals, and you can that you have with OneGold, and you can redeem them through AppMax. And you can have the physical coins sent to you. And one thing that's cool about that is you get the best bulk price when you go to do that. The other thing that's nice here in California is I've got to buy $2,000 worth of gold or silver, or a combination of them, in order to not pay a 7.5% sales tax. And so this is a way for me to kind of store up until I get to 2,000, and then I can redeem. So, anyway, it's an option that's out there for you guys to kind of consider and think about. But Levi, I want to thank you for coming on today. And, I think it's been helpful for a lot of people to kind of understand things around tariffs, what's been going on in the past, where we might go for this year. Do you have any other words of wisdom that you can leave with us?
Not really, no. I mean, I would just say in general, if you're new to the market, or if you're not, certainly, beware of premiums right now. I think that could be sort of a sticking point throughout this year. So yeah, do your due diligence there, and yeah.
And then the last thing I'll just say, guys, is I'm going to put a couple other videos on here that'll show you how to use OneGold if you've got questions there. And then from there, hit the subscribe and like button as well, and also the bell icon. And if you've got any questions for Levi, put it down below. What I'd love to do, Levi, is have you come back on, probably towards the end of March, beginning of April, and see if we can do a live stream to answer anybody's questions that they might have for you about OneGold.
Yeah, I would love to.
That sounds awesome. All right, guys. Well, thank you everybody for coming, and peace out.